A whole wave of new indicators has been showing up on TradingView lately, and these are the 4 sitting near the top when I sat down to record this. There are probably plenty of reasons traders are liking them, but instead of asking which one is better, we look at the actual engine inside each one and how it really works. Cardwell Range Analyze, created by MarketTick, is a trend and momentum tool that pairs an RSI range model with a moving average trend filter, then attaches a full set of trade levels to every signal it prints. Its default settings treat 40 to 80 as the bull range and 20 to 60 as the bear range, and both bands are adjustable inputs. It draws a labeled entry, a stop, and 3 take-profit targets directly on the chart, and it fills the space between them to show the risk and reward zones. Alongside that, it runs a dashboard listing the current regime, the RSI reading, and the trend direction, and it outputs structured webhook alerts, so the signals can be handed to automation. The logic itself is a 2-part gate. It calculates a 14-period RSI and checks price against a 50-period moving average to set the trend. A bullish regime requires price above that average and RSI inside the 40 to 80 range for a set number of confirmed bars, and the bearish case mirrors it. When the regime flips, the signal prints, and the levels are placed as fixed multiples of ATR, the stop at 1.5 times ATR, and the 3 targets at 1, 2, and 3 times ATR. There are also optional higher time frame and ADX filters, both off by default, that can gate the signal further. It works as a standalone tool, since it produces the entry, stop, and targets, without needing a second indicator. It can equally sit as a regime filter under a separate system that defines the exact entry, using this only to confirm the trend and momentum agree. The limitations are worth being clear on. The levels are pure ATR distances rather than structure-based, so they keep the same size regardless of nearby support and resistance. Cardwell Range Analyze is a complete signal and management package, and the webhook and dashboard layer make it genuinely practical to run day to day. Its direction call rests mainly on the moving average, and the fixed ATR levels are convenient but blunt, since they do not adjust to where price actually reacts on the chart. Smart Money Fibonacci OTE engine, created by ChartPrime, is a market structure and Fibonacci tool. It reads swing structure and highlights the optimal trade entry or OTE zone, which its inputs default to the 0.618 to 0.786 range. The practical value is that it keeps the Fibonacci drawing current on its own. Instead of anchoring fibs by hand and redrawing them every time structure shifts, the indicator re-anchors automatically, extends the levels to the current bar, and labels each level with its price. The logic starts with a 10-bar pivot to find swing highs and lows, when a new pivot high takes out the previous swing high. While the trend was neutral or bearish, it registers a bullish shift and anchors the retracement from the swing low up to that new high, and the bearish side mirrors it. From that anchored leg, it draws the standard set of levels and shades the band between the 0.618 and 0.786 levels as the OTE zone. As price makes new higher highs within the same trend, the anchor extends to the new extreme, so the levels track the move rather than staying fixed on the old leg. It can run as a standalone entry framework if you trade OTE pullbacks directly, since it gives you the zone and the structure context in one. It also works as an overlay that flags when price has retraced into the zone, next to a separate tool that provides the actual trigger. The clear limitation is that it draws and nothing more. There is no confirmation logic that judges whether a retracement into the zone will hold, and no signal, alert, or filter beyond the levels themselves. The zone is defined purely by the 2 retracement inputs, so what it marks depends entirely on the pivot length and the structure that pivot happens to catch. As an automation of manual Fibonacci work, this is clean, and it stays out of the way, keeping the levels anchored correctly as structure develops. What it does not do is add anything on top of the drawing, so the edge still comes from how you trade the zone, not from the indicator itself. From session to trend trading, from fakeouts to ORB setups. Every position pre-calculated and back-tested, no second guessing. Available as separate tools or as the complete Pro Suite. More info on our website, link in description. High-volume pivot support and resistance zones created by Big Beluga is a support and resistance tool with a volume filter built into it. Rather than drawing every pivot, it only plots the levels where the pivot formed on above-average volume, and it carries volume information into the zone itself. The practical use is that it thins the chart down to the levels that formed on real participation. Each zone is drawn as a box, padded by ATR so it has some width, and inside that box it plots a cumulative volume delta line, which shows whether buyers or sellers were in control while the level was building. It looks for pivot highs and lows on a 40-bar lookback, and it validates a pivot only if the volume on that bar was above its 20-period average by a factor of 1.2. If that volume threshold is not met, the pivot is ignored and no zone appears. When a zone is live, it tracks how price interacts with it and prints markers. A breakout when price closes through. A hold and retest when price returns to the level and respects it. And a flipped retest, where a level that broke is later tested from the other side, resistance becoming support or the reverse. The volume delta line inside the box keeps updating as the zone ages. It stands on its own as a level engine, since it delivers the zone, the volume context, and the interaction markers without a second indicator. It also fits cleanly under a trend or momentum tool, using that tool for direction, and these zones for the levels price is likely to react at. There are two things to keep honest about it. The volume delta is not true order flow, it is estimated from the candle, counted as buying volume when the bar closes up and selling volume when it closes down, so treat it as an approximation. And the 40-bar pivot means a zone is only confirmed 40 bars after the pivot forms, so the levels arrive with a built-in lag, which is the cost of only showing the ones that cleared the volume filter. This is a focused, practical take on support and resistance, and the volume gate plus the delta line give you more context than a plain level tool. The trade-off is the delay from the wide pivot, and the fact that its volume read is an estimate rather than exchange-level data, so treat it as a map of where price has already reacted, not a forward signal. Machine learning smart money concepts, created by Gaines Algo, is the only one of the four that runs an actual machine learning routine. It applies a nearest neighbors model to change of character events and gives each one a probability and a set of projected targets. The practical idea is that instead of treating every change of character the same, it scores each one against how similar events have resolved before. On the chart, you get a probability badge on the signal, a target box holding 3 take-profit levels, and a side panel that reports the current bias, the score, the number of records the model has stored, and the live volume delta. So the read is not just that structure shifted, but a rough measure of how setups with this shape have played out on this chart. The engine works in 2 parts. First, it watches for a change of character, the point where price closes beyond the previous swing, and when one fires, it records 3 features of that event: a volume delta reading, how far price displaced relative to ATR, and how fast the move happened. Those events go into a growing database. Separately, it looks back at older events whose outcome is already settled, checks whether price ran further in favor or against over a fixed 20-bar window, and labels each a success or a failure. It is built as a context tool rather than a mechanical entry system, since the output is a probability and a set of targets, not a direct buy or sell. It sits most naturally alongside your own entry method, adding a historical read on the setup rather than replacing your decision. The limitations are important with a tool like this. The model trains on its own generated labels using that fixed 20-bar window to define success. It holds only 5 neighbors, and the probabilities are measured on the database it built from the current chart, not forward-tested on data it has never seen. So the machine learning is genuine, but the number it produces is in sample, and a high reading reflects past events on that chart rather than a validated win rate. This is the most technically ambitious tool of the 4, and the engine underneath is a real nearest neighbors model, rather than a label bolted onto a standard indicator. The catch is that its probability is self-referential, scored against a history it generated itself, so it is best read as a structured way to ask whether a setup has precedent, not as a tested edge. If you're struggling in ranging conditions, check out our latest video where we reviewed 10 range trading indicators on TradingView.